Good morning, retail traders. I'm Washboardjim with a Sneaky Snake trading strategy where I talk about chart patterns, moving averages, and being in the now. And we got earnings coming up this week, so we're going to be talking about earnings. Banks are definitely on the list to start the earnings schedule off. I think this could be a good catalyst to start stabilizing the market and waiting for Trump to come in and get inaugurated. So I think we could start having some consolidation and then going sideways, but we'll still have a little bit of volatility in the crosshairs. So Monday after close, we got KBH, that'll be home builders, and then Wednesday morning we're going to have banks. We're going to have JP Morgan, Citibank, BLK, BlackRock, Wells Fargo, WFC, and Goldman Sachs. And then Thursday morning, we're going to have TSM that's going to be on watch, United Healthcare, Bank of America, Morgan Stanley, and then USB Bank Corp, US Bank Corp. And then Thursday evening, we're going to have JB Hunt, which will also be on watch. So let's get right to it. This is going to be my setup. I usually have my watch my message center right here, and then down below it will be my TV that I watch, Schwab. Had to think about that for a second. So we got Bank of America right off. We're going to go down with volume highs. I like to play momentum stocks, the ones that have the best volume. And then we're going to check out the percentage highs and percentage lows when I come in that morning, see if anything had dipped, for me to go ahead and jump into the trade and make an earnings trade. So Bank of America is the first one on the list. We did have 3 black crows right here, and that would have been a great opportunity to buy this at the 21 EMA. And as she runs up the rest of the week, the next 3 weeks, this is a weekly time frame, and we're sitting above the 9 right now. So we're bullish as long as we stay above the 9, or we come back and we hit that 21 for a solid support. So we do have a tweezer bottom down here, and that's going to be the support for this week. I'll magnify this up so I can get a good shot of it. Right around 43.86. Then that 9 will stay bullish. If we can stay bullish above it, that'll be your first support at 44.80. Then if she dips on down, we got a pivot point in here on the weekly time frame, right around 43.34. With resistance to break this coming week, right around 45.64. And that's in between that gap right there. So now I'm going to take this to the daily. And we're still at that 21 on the daily. And if it does pull back, you got a pivot point area at 44.37, which would be off that 63 EMA. We do have an underbelly support level right here, and we're going to draw that in. Take the body of that candle and run it to the body of the next, and it also lies at that first support level at 44.80. So if that holds, we'll be okay to run this back up to the resistance level of 45.64, and that'll be where you want to break. And if that breaks, then we'll take it up to the top up here for the rest of the week at 46.26. So Bank of America, Buffett had sold a lot of his shares. I think he did a pretty good decision because it did pull back, and we had 3 black crows, and then we had to rebound. Hopefully he got back in on that dip. So the next one is TSM. This one here had a big gap up. So right now we're going to pull this up to the weekly time frame. And that 9 EMA is going to be your solid support to hold on this week, and that's right around 200 and some bucks. If that holds, we're going to be fine. Right around 238, somewhere in that area. And if that doesn't hold, we'll drop down to the 190. But for right now, we stayed bullish above the body of that candle. So that's going to be your support level to hold to stay bullish at 208.81. So that's a pretty simple one to look at. If as long as we hold the 9, the 238 will be okay. If we don't hold that 9, we'll drop down and hit the 21, and that should be a solid buy. Let's go ahead and take this to the daily time frame. I'm seeing the same situation. As long as we hold that 21, we're going to stay bullish on this trade on the daily. And I'm going to go ahead and put a support line right there at 202.96. Well, that's the wrong one. We're going to erase that. I want to get right on that 21. 203.40. Somewhere in that area. That should hold it. If that holds, we'll stay bullish. As long as we stay above the 9, we stay bullish. But TSM, it's had a pretty good run. Then we had that real strong pullback. And it's all going to be about this week, how the market trends. With a low support right around 203.40 to hold this coming week. If not, she'll drop down to that low support of 200. And that's going to be TSM. WFC, Wells Fargo. We're going to take this to the weekly the same way. We broke below the 9. Now, Wells Fargo is not one of my favorite banks by any means. We could pull back easily to this 21 this week and bounce off that 21 right around $67. If this support holds right here at 69.63, we stay bullish and we try to break resistance at 71.92 or 99, right around $72. So that's going to be a tight channel. I think we could pull back and hit this 21 and then bounce up off the 21 and find resistance at 69.63. But for right now, we're going to take this to the daily time frame just to kind of get some confirmations. Definitely the 63 is your support level on the daily to hold. We bounced above it and we held above it pretty well. So it's major support level at 63 EMA. If that doesn't hold, we are got a gap right in here, and that gap support is at 69.63. So that's a major support level this coming week. If not, we could drop down and hit the bottom of this gap even on WFC. So I'm not very bullish on WFC, but we did have a nice gap up on earnings here, or before earnings. So it must have got some kind of news, and then it pulled back, and then we had another run up. So basically, I'm not a very big bull on this stock right here, but if we hold that 21, that 63 this coming week on the daily, I think we'll go ahead and bounce and consolidate between that and that moving average at the 9. I mean, if we do break the 9, we'll run up and double top up here to 72.95. Citibank, this is a well talked about stock. We're going to go ahead and pull this up to the weekly time frame. It's had a nice bounce already. You can see last week. So as long as we stay above the 9, we're bullish, and that's right around 69.87, 69, around $70. Around $70. If that doesn't hold, another support at the 21 at 67.27 to hold support. If that doesn't hold, then it's going to be this here 1, 2, 3 triple top break, and we're going to draw a line across that body of that candle right there, bring it up just a little bit, so somewhere right around 66.31. Somewhere in that area. So let's take it and look at the daily. Yes, the 9, the 50, we've got the 50 SMA right here, and that could hold on the daily if we do start to pull back. But for right now, that 21 is definitely holding up as support. right at 71.20. Now Citibank has had 3 weeks of gap down, and we could start to consolidate and try to break this week's resistance at 72.48. So keep a good eye on Citibank. I think it'd probably be one of my top ones I'd be watching for right now. And then you got JP Morgan. JP Morgan's had a real good breakout. I think all these stocks run up on the election and hopes of Donald Trump, because they do have them in the crosshairs of being a good trade in the 2025. And that's the banks. Right now, interest rates are too damn high, but that benefits the banks at some point and also hurts the consumer. So it's a iffy situation right now. You could have more foreclosures because there's higher interest rates and more debt, which brings in more money, which also hurts a lot of people. A lot of people have to file bankruptcy or something like that. People are definitely, there's credit. I got one credit card that's at 19%. I called them up and I bitched them out. I got excellent crediting rating. And I just said, I ain't using your damn card. I haven't used it for 2 years. And I won't be using it until you get these interest rates down. So that's it. Support level for right now is going to be the 63, but let's look at the weekly on JP Morgan. Definitely the 21 is, if we don't hold the 9, which we kind of did for the last 4 weeks, this thing could easily pull down and find support off that 21 EMA. And I'm going to put a little price line right there, right around 230.92, with this week's resistance to break at 243.64, with a solid support on that 9 EMA right around 239. Then we're going to go to the daily. Same thing here. If we don't hold the 50 SMA on the daily, we're going to drop down and hit the 63 at 235. At 235.32 with a solid buy. And that'll be the gap support that we have right here at 235.32. So that could be a real solid support, which gives us an inverse head and shoulders right here. It pulls back and hits that right shoulder, bounces up, then kind of retests again, and then breaks out. So I'm liking this one right now, JP Morgan. I think we're at a good spot, but if it does pull back, I'm going to definitely get into this stock at 235.32 without a blink of an eye. Then we got USB. We're going to pull up the weekly. We're at the 200 right now, which makes it a solid support. We had 3 black crows, then it bounced up off the 3 black crows and run into the 9. So the 9's resistance on this trade, right around 49.31, with a solid support to hold down here at the bottom of this here support line, right around 47.30. We're going to take this to the daily. Really solid support. This is a triple bottom. I really like this 47.30. We could have a retraceable run back up to the upside. I really like this spot. This is a good looking chart. It is a descending triangle, so that is bearish. And any kind of pullback, I think, will bring it up and hit that resistance line, which is now support at 47.30. If that doesn't hold and we have something, catastrophe come down, we could run down and hit this 63 EMA. But for right now, I think we need to go ahead and, I think that's the 63. No, that's the 200, excuse me. That's the 200. That's the 63. That's the 200 EMA. That'd be a strong buy too. But this is beautiful. This is a triple bottom, but it also, we have, some conflict that it's descending, but we had a nice little 3-day sell-off, 3-day sell-off, and this thing could rebound and bounce back up, break the 9 EMA on the daily, and even run up here to the 50 SMA for a head and shoulders We got the head right here with the left shoulder line, and we could hit that right shoulder line. So that's USB. I'm liking it. There's JP Morgan and USB. I like both of them. Then we've got the weekly time frame right here. We broke below the 9, so we could run back and hit the 21 EMA right at 118, 119 area. And that's Morgan Stanley with a solid support this week. If we hold that 123.38, we stay bullish and we run it up to resistance level of 127.47. As you notice, I'm not using the wicks. I'm using the bodies of the candle because that's where the most of the consistency lies. We're going to the daily. Same thing. If we hold that 63 on the daily, we can run back up and break the 50 SMA at 127.47. If that doesn't hold, it's a gap down here. We're below the gap, so we're at kind of like a pivot point area where it comes back and hits the bottom of this candle right here and becomes a solid buy at 120, between 119 and 120.60. So this one, I'm going to be kind of iffy on it, but I think it's at a good spot right off that 63, and we could bounce up. So that 63 EMA is going to be a solid support on the daily, and if that holds, that 123.38, we'll run it back up and try to break resistance at 127.47. United Healthcare definitely had a hard, solid pullback on this one right here after earnings. And then we bounced back up a little bit. You know, we had that assassination attempt on the CEO. So I'm iffy on this trade. I still am. I'm iffy on the whole sector. But if we start to have a deteriorating market, healthcare is where you want to be. So resistance for right now on the daily, and I'm only going to use the daily time frame here at 540. And that's going to be your 200 SMA. As long as we hold the 9, we stay bullish in this trade this coming week, with a resistance to break right around 527.02. So we got 515 for your low support, and that's real low. And we've got, right now we closed at 520, so that could be a dollar dip to the 9, or we break or hit resistance at the 200 SMA on the daily time frame. We got Goldman Sachs next. We're going to take it to the weekly. We have the 21 right here at 547.98. That's your solid support this week. If that holds, we got a huge gap down, and I don't think that's going to be a good idea to run it all the way back down there, but that can. Look at the run it's had from 290 all the way to 600. So that's a 300% increase in a little bit over a year. 300% is quite a bit. Now, Goldman Sachs is to me is probably one of the most crookedest banks out there. It was at one time, and it's full of progressive liberals. So, yeah, I said that. So definitely the 21 right now is your support level. This thing could fall back down and land off 480 and be a solid buy on the 50 SMA on the weekly time frame. So I'm not going to be very bullish on this trade at all. Not at all. Maybe as a daily scalper. Your next support is definitely going to fall right around 528.49. But this is an investment bank, and they're probably one of the most crookedest companies out there, Goldman Sachs. And as long as we hold the 21, we stay bullish. We can scalp it to the upside. And let's look at the daily. This is up 300%, okay, in less than a year and a couple months. The daily, we broke down below the gap, so that gap's going to be your solid resistance to break this coming week, right around. Well, come on. 567.92 is going to be your hard resistance to break, with a pivot point area of a double bottom at 547.67. with a low support at 528.49 for maybe a strong buy. But definitely Goldman Sachs is not my favorite bank by any means. Then we got home builders, KBH. It's definitely had some pullback here. It could easily drop down and be a solid buy at 60.30. Definitely be a solid buy at 60.30. And resistance to break is going to be right there, right around 65.42 on the body of this here candle right here. 65.35. And that'll run right into the 9. And that's on the daily. So KBH at 60.30, I think would be a double bottom play. And I'd probably jump in that trade small and see if it held. And if it did, I'd add on my positions on the way up. And there's your support level right here. I'm using this gap in here, this head and shoulders. And that's right where we are right now at 62.92. And we closed at 63.19. So low support, 60.30. Resistance to break is going to be 65.35. BLK, BlackRock, they were the big pump on DEI. I've not been a fan of DEI. I think it's racist to hire people on the color of one's skin and their gender. But they've been a big push on this. And support right now, easily down here at 9.16 if it wants to dip on down there. But for this week, let's look at the weekly on this. BlackRock from 745 up to 1,082, and this year, that's a huge gap up. You could put the fibbies on this. Let's see what it looks like with the fibs. And we definitely pulled back to that first support on the Fibonacci. So this could be a good spot to start taking this trade and run it up to the upside. Let's just keep the fibbies on this for right now. And resistance to break will be 980.70. 980.70. Support definitely going to be the 200 down here at the 50% pullback. But we could start to reverse to the upside on the 38.2% pullback from the top. And this is one we got to definitely watch BlackRock this week. It looks interesting. And we've got 3 black crows right here. This looks like a possible rebound to the upside. But this one's been hit pretty hard. Not hard enough. But 50% pullback's going to be a strong buy at the 200 EMA on the daily. But for right now, we're at support at that 38.2% pullback. And I just really like the way this chart looks right now off the Fibonacci. So keep a good eye on that one. That could find resistance at 980.70 this week, as long as we hold this support. If we don't hold it, it's an easy drop down to the 50% pullback, and I think I'd start loading it up right there. Then we got JB Hunt. It's always signs of recession when it comes to transport. Earnings are coming out on it too this week. Right now, as long as we hold the 200 SMA, we're at a solid support. Let me get another drink here. Right around 170, 178. If we hold that, then we'll go ahead and continue back up to the upside to 177.46. I kind of like this one, then long 181. But again, we're going to try to get some of this cost down for the truckers. Gasoline prices are way too damn high. If we can get the prices down, we can get our groceries down, we can get a lot of stuff to come down with this high inflation. There's no longer a war on energy, which we've had for the past 4 years. And every time you have a war on energy, your prices are going to go up. And then we have the ungodly amount of spending that's gone on with the federal government. It's really out of hand, over $13 trillion in 4 years, out of budget, compared to what Obama did when he only had 6. And he did that in 8 years. Biden did it in 4 and doubled it. So it's a real bad situation when it comes to government spending. I heard the other day that 45,000 government jobs were created each month, which in my opinion is more bureaucracy, and we're going to try to limit some of that bureaucracy and make it easier for businesses like mine and other people to be able to run their business at a decent rate and correct some good profit. Right now, my cost of living with my business is up $1,100 a month. So I'm pissed. So we pull back and we hit the 200 SMA. We're fine. And resistance to break is going to be 177.46. And that's it. Retail traders. This is this week's watch list. We're going to be looking at earnings plus anything that pops up. I think it's going to be the catalyst to start making the market to consolidate unless earnings are bad. And they could be. I mean, you listen to CNBC about tariffs all for last 3 months. And the uncertainty, I don't see how they can come up with so much uncertainty when you know they've already had 4 years in office and they were one of the best years of my life when it come to my business and other businesses. And here in the last 4 years, if you're not in the top fat cats and the billionaires, you didn't do too well if you own a business. But if you're a government welch, government mooch, you did probably pretty good. So this is the sneaky snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. And I wish everybody a great week coming up. And let's see if we can get this market to start to consolidate. And then we got Trump coming in, and we'll see how the market reacts to Wall Street knows, and they're not saying it, that they're going to be cut off. All the money printing is going to slow down. We're going to cut government jobs. We're going to clean house. We're going to clean the FBI. We're going to clean the CIA. We're going to clean a lot of that up. Hopefully we can get back on track and be respected again. So everybody have a great day, and let's stop these wars. Sneaky snake trading strategy, where I talk about chart patterns, moving averages, and being in the now.